Michael Grant is joining us now. He's Calamos's co-CIO and senior co-portfolio manager. Great to see you. You manage a long-short fund in particular that I want to dig into. But I do first want to ask you about this issue of trade, because I'm curious, running a long-short fund, how much you even pay attention to some of these macro factors like this back and forth. When are Trump and Xi going to meet? Are we going to get a substantive deal done? How important is that for you?
It's absolutely important, without question, because what's happening with trade is realigning global supply chains. And it's just part of the picture, but in our view, there's a U.S. imperative to realign global supply chains to regional supply chains. And the negotiation with Xi is just part of that. But it has ripple effects fundamentally, both for economic growth and, of course, for companies.
Well, one of the things that you face is something that Rob recently wrote about, which is that the internet continues to have a kind of deflationary impact on everything. So Rob, help us understand if investors are taking that into account as they're driving up stock prices, not today, but over the long term. And, feel free if you wish to ask Michael a question about it.
Yeah, I guess the way I think about it is you have two major forces colliding. So the last 8-9 years, profits have abundant, which we talked about in the last segment. And I think market beta, just the directional move of the market, has systematically sort of disguised what I think are rising idiosyncratic risks. So the risk to the market today, I think with some of the companies you talked about earlier, are companies whose value proposition, their product or their service, they're being duplicated by an internet platform or somebody else, and that creates a price war. And so for those companies that offer something that somebody else is offering at a cheaper rate that is perhaps even easier to consume, it makes them less competitive and less profits and less earnings.
And so are you looking at some of these same themes, and then how do you suss out, given what we're talking about here, along put China in trade and the supply chain shifts on top of that, how do you sort of try and pick the winners, as it were?
Well, there's a deeper issue here, which is the impact of globalization on workers throughout the developed world. And a simple definition of globalization is let's boost economic growth by reducing wages. And 20 years after doing that, you have social and political issues that we see everywhere. We see it in Europe, we see it here in the United States. So we think that there's a political imperative everywhere to run economies hot in a way that benefits labor share of income. And until the established political orthodoxy gets behind this trend, they're on the back foot. So it's absolutely something that affects how different economies are going to do, because the shift from global supply chains to regional supply chains is part of this theme. And it has implications for corporations and long-term profits.
Well, if I'm hearing Rob correctly and you correctly, what I hear is the pressure to push everything down, deflationary pressure, whether it's the internet or whether it's wages. Does that, obviously, it must factor into when you're picking what to short in your fund, the kinds of companies that aren't going to be able to weather that storm?
Sure. So, for example, one of the issues right now is that economic growth is slowing here in the United States, and profits are going to slow. And yet, after a long expansion, you have administrative costs, depreciation costs, and labor costs that are inflexible. They're not going to ease, right? This is part of this theme that labor share of income has got to advance. And you're seeing this in U.S. politics as well. So as a consequence of that, many companies will face margin squeeze as we progress through the year, and that absolutely affects how we're allocating our capital.
Are stocks in the U.S., though, still going to rise broadly this year, do you think?
I don't think so.
It doesn't sound like what you're saying.
I think the key issue today is that last year's contraction of financial liquidity implies a broad slowing in global economic fundamentals. And we had a spectacular profit setting here in the U.S. last year. And year-over-year profits are probably going to be flat for at least a couple quarters later this year. And I don't think that's discounted by any means in financial markets.
All right, we have to leave it there, unfortunately, but we'll definitely have you back, Michael. Appreciate it.
Thank you very much.
It's a theme we keep talking about.